Happy Monday, traders. This is Trader Tim from eminimind.com, and we're doing a trade recap slash market analysis for the 3rd of February 2020. And a lot to talk about today, so let's just jump right in. For those who like to take swings in the S&P, um, up until the introduction of the micro E-mini, it was pretty risky to take a swing with the full-size contract if you're gonna, do a couple of contracts and try and swing it from the daily chart, holding those contracts overnight, riding them to either the negative 23% retracement and then, trailing your stop. We're talking big, big numbers, hundreds of points instead of, a couple of points or even tens of points on an intraday chart. So some options I've given in the past are to use something like the SPY, the ETF. You could use an option contract that can get a little bit finicky at times, but with the micro ES, you can, that's a good instrument to be able to swing some of these larger daily moves. The increment, the tick increment, or the point increment is only $5 instead of 50, so it's a little easier to manage for folks if you're trying to take advantage on the daily chart. If we go up to the monthly chart, big inverted hammer up here at the negative 23 from the target that we've had for a couple, quite a long time now, 23.75. So we'll see if that starts us a move lower. Now the key level of this candle is its low. So the line in the sand is 32.12.75. If we break that low, then I'd look for us to certainly go lower from there. If we follow this month's inverted hammer with a hammer candle, like opposing tails, then there's a good chance that we'll go sideways here for a couple of months. But we could just as easily come up and break the tail of this inverted hammer and just keep going higher. But at this point, you've got those reference points: the low 32.12.75 or the high 37.50 to work off of. Now let's get into, well, before I get into the intraday ES, while we're talking about swings, let's go over to a couple of the swing trades. I got taken out of AMED on Friday. On the move down here, had my stop underneath this candle's low because I'm just trailing each candle's low on the move up. So it ended up being basically break even. Microsoft still going good. This one, I've got my stop below the swing low. The approach that I've always taken with trailing my stops or managing my position is and this goes for intraday trading as well, give it a little bit of wiggle room at the start, and then, with intraday trading, I tend to go conservative, give it that wiggle room, and then as it starts to move my way, maybe get a little bit more aggressive, and then a little more aggressive, and if it does get a pop or a spike, then get super aggressive and trail my stop really tight. With swing trading, it's the same starting approach, giving it a little bit of wiggle room. So like with Microsoft, here's was the entry back. It was actually on the 7th above the high from the 6th. My stop was below the candle's low, and as it starts kind of going, once it breaks the swing high, that's kind of your okay, we're off and running level. At least that's the level I use. And then I just, I come in and I trail each candle's low, and I'm trailing, 50% of the position this tightly. And then when it breaks that and get taken out of that first half of the position. Then I'll come in and trail a little bit more conservatively and just trail swing lows. And that way, you could end up going up for a couple of months here, and I don't have to keep getting in, getting out, getting in, getting out. I just take that second half of the position and just trail the swing lows, and it's got little room to pull back and go higher. And you don't have to be, placing quite as many trades as you would if you're going super, super tight. Let's see. Let's go over to today's ES trade. Friday was a really big candle, and go back to the daily chart quick. Really big candle on Friday, and so as we opened up today, we were gapping up, but we were still within yesterday's range. But when the range is so big, it doesn't deter me quite as much from trading on an inside day. If we're like up here and we have an 11-point candle, and then the next day we're trading inside that 11-point candle, that's a day where I don't want to be very actively trading. But if it's a nearly 70-point candle, there's likely going to be some movement that's playable. Right off the open, we made a pretty strong move up, and there really wasn't a pullback on the first. Let me go to a 5-minute. That'll be easier to see than the 512. There really wasn't a pullback to this first swing high, and this line up here is the top of the first 30-minute range. Get rid of this too. So here's the top of the first 30-minute range. Jumped up at the 30-minute mark, had construction spending and a few other numbers come out. And so we jumped up, we made a high tick, and then we immediately, or not immediately, but we made a higher price after that high tick, just maybe 2-3 minutes right after that. And so then when we pulled back, see how we went from a high of the day and then came down and broke the swing low. When you've heard me talk about this, I'm sure, if you've watched any of the prior videos, when we get that kind of a move, we go from a high of the day and then come down and go straight down. It tends to be a V. So if we're at this point, we've gone straight down. Okay, how do we fill out the V? We go straight back up when we make that V reversal. And so what I was looking for here this morning is, okay, how far are we going to go down into the first 30-minute range? And remember, that's this horizontal line here at 57.75. So if we went down, and let's say we went down further, and so a bounce would take us something like this, where let's say we went down all the way to here, 51s. Well, then a bounce just to the halfway point would take us to this 30-minute range high. So this is the 30-minute high of the morning. This candle here is what's marked its high. And so using that as my sort of support resistance level. And so since we did not go in very far, I still went ahead and drew up the short, and notice that we broke it pretty convincingly here. And so I felt like this was enough support, or at least potentially the top of the first 30-minute range, that when I drew up the long, it wasn't exactly the top of the range, but it was pretty close. It was about a point or so away. So I went, grab this. There we go. I went with a 32.59 long, and a little bit riskier of a play. I was banking on the support from the top of the first 30-minute range, and you have this kind of cluster back here, but really more so just identifying that the first 30 minutes were in a very, very strong uptrend, and When we make these kind of straight down moves, they're usually followed with a move straight back up. And then we also had a high price that occurred after a high tick. And typically, that's a sign that we're going to make new highs. So I took the 59 long. It was kind of sloppy right around the entry, but that comes back to giving it some wiggle room, using that 1.5 stop, and just leaving it alone. Um, Once we started to work our way up, so we made like a new high above this swing high by a tick, pulled back, went another 2 ticks higher. I did take the opportunity here on this double bottom to bring my stop up. I'd already gotten the first target hit, but I just moved my stop up, which ended up being just about on top of the break-even point. And so from there, we finally made the negative 23. We completed the negative 23, and I drew up the next retracement long. This was about a 4-point, the distance from where price was to where my stop was. That's about as far as I like to leave my stop away from like the current price or the highest profit point. So I left my stop down here. We didn't even pull back to the 50% all the way, and then we started making these smaller retracements. So when I moved my stop up again, it was here underneath the next 61.8 level, and then finally got taken out on this one up here at 64.25. So that was a nice long setup, or a nice trade. Not the cleanest of longs, and a little bit. I would consider that more of a kind of advanced level assessment of some of the little nuances that are occurring. The stuff that we see day after day, but just having the um, sort of conviction, I guess, to take that setup. So then from here, we made a kind of a swift move lower without really any swing low or without any pullback. This little move up here where you have one red candle, it really wasn't enough of a swing low to get me to initiate this as a short. Plus, at that point I was still in the long, but I did draw up a short like this and try to get in up here, but I didn't get filled. So that moved down, and then we came into the full halfway back. This guy here, you might have seen from highs to lows, made a nice touch at the 50, but we didn't really make any smaller retracement after that until we hit the halfway back of the day, and that one was about like so. And when we hit that one, let me bring that up a little bit. Ended up being about like that. And we did touch the long pretty nicely. But the short then traded, and we kind of went back and forth here. And at that point, we were a couple. It was really, my day was pretty much wrapped up. So I didn't take any trades after that. But that you get into that conundrum where you come down, you touch the long, and then as you're getting ready to take a long, you tag the next short, and that gets some resistance, and you're kind of back and forth for a little bit before we break. So there really wasn't a lot left in the day in terms of movement. We kind of made the move up, the move down, and then the rest of the day was just sideways anyway. So you really didn't miss much by shutting down hour and a half into the day like I typically do. So that's what I got for you today. If you have questions, feel free to leave them in the comments below, and we'll talk to you tomorrow in the live trading session over at eminimind.com/VIP.